telling you, it's going to be quite different. So keep an eye out. I got a live stream. I gotta go. I'll see you. Hello, people of the line stream, and the live stream. Yeah, buddy. um, so we are going to talk about the good old Bitcoin and the Bitcoin stasis basis. You must be wondering, what is the Bitcoin stasis basis? Why would I want to learn about that? Well, if you've been watching my, you know that I do talk a lot about le Bitcoin, right? And there's a reason for it, right? Because it's a fundamentally different type of commodity and currency and payment network and secured network and informational archive database network than anything that really came before it, even though there were other blockchain type technologies like Merkle trees, etc. And as I've written about and spoken about a number of times, American Airlines, as far back as 1981, was using a Merkle tree blockchain effectively to manage, what they call A advantage or advantage or whatever they call it, AA advantage, which is basically their customer loyalty points thing, which I think people now refer to as air miles since many decades. That's what we call them. Right, but air miles are loyalty points, so they had a system, right, for managing that, and that was effectively really the first, consumer-facing cryptocurrency, in the sense that those points, although they were only redeemable with that one vendor, were redeemable for something that had a financial value. So it was a form of currency, right? The more points you had, the more dollars you saved on your next trip or whatever. So that was a cryptocurrency, legitimately, and it was built to scale to service a not tiny and growing airline, right, at the time. And it certainly was a pioneer in that sense. However, of course, 27 years later, Bitcoin was invented by Satoshi Nakamoto, and in so doing, really made something that was globally scalable, not just something that could be used for a single airline. Right? It was actually globally scalable as a currency for any transaction that where the two parties would agree, to accept it. And this gave Bitcoin the ability to scale beyond a single industry, single vertical, single horizontal, and just be a globally available currency, which is effectively a mathematical protocol, right? That's what makes it work. It's the math that makes it work. What makes the price go up and down is separate from what makes the technology work, right? And as you know, for those of you who trade, the only thing that really makes the price go up and down, right, is if there's more buyers, the price goes up. If there's more sellers, the price goes down. And we have ways of determining whether there are more buyers or sellers in a given instance. Thus, we know whether or not the price is likely to go up or down based on that leading information, right? And you don't have to, have control of every single buyer and seller order to know if that's happening. You can look at the chart of the asset you're trading, even the specific exchange you're trading, if there is a chart for that. And the big ones all have charts. And the index one is an aggregate of all the big charts, plus a bunch of other smaller ones. That's why I like the index one the best for general scoping, and then for the actual trades, I like to use the exchange I'm on if possible, or the closest thing to it sometimes when the one I'm using is not available. But usually the ones I'm trading on, they have their own charts, so they're easy to do that with. So what is the Bitcoin Stasis basis? Well, you'll notice that actually this happens in a lot of assets, but especially in something like Bitcoin, which is the leader of its industry class, right? You'll notice when an action takes place, like Friday and the little sell-off that Bitcoin had, oh, pandemonium, Bitcoin's gonna crash. No, obviously not. It dropped a couple percent in price value. There's like a 5% range on the day from wick to wick. The actual body of the candle was only a couple percent. That's not a very significant move in Bitcoin land. And what happens after that is you get like the day that followed, which was Saturday in this case, where the asset was just basically flat, right? Flat like the fields over there that I'm not showing you. Well, they just got mowed by the farmers and cut down their hay for their cows or whatever they do with that. So after that volatility, and there was volatility on Friday, and there was also a nice trending move on entropy on Friday. In fact, there was a couple, right? Just like there was a bunch of volatility. Saturday turned out to be relatively quiet, right? Pretty flat. Yeah, of course, if you look at the 1 minute, you can see the movements going up and down all day. But it was kept within an extremely tight range. I think it was less than 0.5% from top to bottom. Pretty much. Like it was pretty tight. And if you zoomed out to like the 15-minute and you didn't scale up those, and you didn't zoom into those candles, it looked pretty flat. It looked like you could skate off of that thing. And that is an example of the stasis basis. What does that mean? Well, when Bitcoin is in stasis, meaning it's not moving much, and you've got a basis of where the returns are, and the price action is just following, sitting there, not moving anything. That's your stasis basis, right? Your static base, if you want to call it that. It's where the Bitcoin price is following the returns. The returns are just sitting there going sideways. And it's not just because it's a weekend, although it does happen a lot on weekends. But it's not just because it's a weekend. It's because after you have a tremendous amount, after you have even a decent amount of volatility, right, and you've got a lot of other things lining up as well. People say, oh, it's Wall Street bets that crash the market. No, it's the VEPs that moves the markets, right? And people say, no, it was, the jobs numbers or whatever. No, again, no, it's the VEPs. Ignore all those other silly headlines. Because you could put that narrative around anything, right? If Wall Street bets, or whatever, Roaring Kitty's bet had gone up instead of down, you would have said the exact same thing. Oh, it's because of Roaring Kitty. It's not. One trader's trade, as big as it is, does not the market make. Also, keep in mind, if he made $200 million one day, it means someone else lost $200 million in that day, right, against this trade. Or some other trader lost $200 million. If he lost $200 million on Friday or whatever, 250 or whatever he lost, it means somebody made that money. Right? Somebody was counterparty to his trade. We all know there were some pretty big short sellers, as they like to call themselves, which is a patently absurd thing to be in 2024. And I don't mean just because it's short selling. I mean to be only on one side of trades. All I do is short. Why? Why don't you like? If you say all you do is short, what you don't realize is actually all you do is long the invert of that pair. So what you're saying is silly nonsense. You don't only short, and you don't only long. You trade both ways if you're smart. And if you only run short trades, if you only sell, again, you're just longing the inverted of that pair. And you're limiting your potential profits. Right? Because shorts can only go to zero, effectively. For the most part, yes. And technically, they can actually go below that. We've seen assets go below zero. You know, oil, even crypto. We've seen assets go to below zero. They usually come back. Because at some point, somebody will realize, hey, they're paying me to take this stuff. May as well take some. Hold on to it for a little while. And see where it goes to. Right? And people do that, and some of them get extremely rich doing that. Right? Usually those kind of things happen extremely quickly. And you need to be well prepared. Your machine needs to be well oiled, so to speak, in order to catch those kind of moves. Doesn't mean it's not possible, it just means it's extremely unlikely. So, bear that in mind. That wherever you're going and thinking about, oh, maybe I'll catch an insane trade today that's, you know, record-breaking, whatever. Yeah, you can never predict those kind of random things, but you can be fully aware that black swan events do bring up. And when I call them black swan events, what I mean is information you can see clearly on the VEPs that's about to happen, like 4 years ago. Right? We saw Bitcoin having a stasis basis in the run-up to the big dump on COVID. And then what happened? COVID dumps. Right? COVID happened, and it just happened to be timed with about 10 different major economic factors that were pretty significant. Deaths, all kinds of, payments and non-payments and credit scores. All kinds of big things are happening. And then it bounced hard and fast. Right? And if you got in on that buy, well, bully for you. If you didn't, well, it's all right. All right. I don't know what's going on there, but anyway. So the stasis basis, again, you can call it chop, sideways action. It's the part where it seems like, oh, this is where it's stable now. No, all it is that that's the launch pad for the next move. That's where the asset is getting ready to move from the next time it moves. And volatile assets, if there's one thing that they do that you can count on reliably, it's that they move. Why? Well, because they're volatile, and returns of volatile assets are constantly moving. That's why you have a standard deviation of the returns. And they're not just sitting there in the same place. They are constantly moving. That is the whole point. That's how you get volatility, is you have a standard deviation of the returns. Anyway, folks, that's going to be it for now. Check out alphatradinghq.com, or just go to alphatradinghq.com/Discord to learn all about this stuff for free. And see you next one. Cheers.